All right. Good evening, everyone. Tim Davis here, coming to you guys with my weekend market review while I have time to get it done and get it out the way before my weekend becomes busy. Today is Friday, June 17th, 2022. The time is now about 9 p.m. And again, this is my weekend market review. And I'm going to start off this week with the VIX and highlight this area and that I've been really concentrating on in this VIX. I'm telling you guys, the VIX is still setting up for a major breakout. Overall, I think the VIX is setting up for a major breakout. Here's a big range. Oh, if I can highlight it real quick. Big range that the VIX has been concentrated in since the beginning of the year. And it's just a matter of time before the VIX breaks out of that range. So I wanted to point that out first and foremost. Now, in the near term, I told you guys that the VIX was hitting a recent level of support, and we would eventually get a bounce there. And we got that bounce right around in that area. So the VIX finally got that bounce out of that above that level of support. Now, what happened since we got that bounce? The VIX did gap up, had a nice gap up on last week, right here. And I told you guys that 9 times out of 10, when the VIX gaps up, we're going to see a gap fill eventually. And this happened right away. We got that gap up on the VIX, and then price action came right back down. Right back down, and look what happened. Filled that entire gap. Filled that entire gap right there. Then we went up again, and now here we are. So now with that said, gap was filled, creating a new level of support for the VIX in the interim, which I would say is right at the top of this wick, and at the bottom of that body, that red candle. That should represent a new strong area of support for the VIX. So we're going to see how this pans out. But if this holds, which I think it should, since we are still currently in this bear market, the bear market is not over, folks. We're still in the beginning stages of this bear market. So this level should end up being a strong level, end up being a level of support for the VIX. So we may see a little bit move up in the VIX, but I think eventually we're going to see next week should see a downward move in the VIX. It finished today at 31.13, looks like. So we should see the VIX move down at least to here, maybe down a little bit further. I don't think we're going all the way back down here. I think that is an area of the past. So to see how that pans out, but I do think the VIX will come down a little bit here, maybe down just below 30, maybe to 29, or right at this level of support around 29.70, somewhere around there. So I do expect the VIX to pull back a little bit sometime next week. Don't expect a huge pullback. I think it could come back down to where this gap fill, where this gap up started early on last week around June the 10th, and possibly test that level of support. We got to see what happens when we get there. See if we hold that level of support or if we break it. Now, with that said, let's take a look at the S&P. No, before I even do that, let me look at the bigger picture again on this VIX, because again, I like to say that will probably be a strong level of support, because I think the VIX is gearing up for that big breakout above that $40 level. And it looks like we've been testing the support level already a little bit on this week. So we're going to probably test it again a couple more times on next week. It's a short trading week next week, so pay close attention to that $29 level of the VIX, which is where I think support is going to be found. And if we look at the Longer-term monthly chart of VIX. I've been showing you guys this, folks. Look at all the momentum. Look at all this momentum within the full stochastics wins percentage on this monthly chart of the VIX. Look at that momentum. Straight up with momentum. Straight up with trending channel. The VIX is in on a monthly chart. Folks, this is calling up for a breakout. And I like to continue to harp on that to show folks that we haven't seen nothing yet in the down move in this market. We are this market is just getting warmed up. So all these bear market rallies, which is what I call them all right now, they still have no legs to grow and turn back into a bull market right now. The VIX is giving us all signs that it wants to break out. Here's a weekly chart of the VIX. Again, we should pull back a little bit next week on the VIX before we get the next move. Now, if we pull back and we hold right around the $29 level, I think the VIX will be gearing up for a fierce rebound. So pay close attention to that. You see that VIX hit around at 29. See if it bounces. If it bounces, folks, I think the VIX is going to really start to rip to the upside. So we need to pay close attention to that. Now, with that said, let's take a look at the S&P. Since it is adverse related to the Dow, I'm sorry, to the VIX. All right. So again, here's my trend channel, and these trend channels have been working like a charm, right back to a level of support. So if the VIX is going to drop, I think we're going to see a short-term rally in the VIX. Short-term rally in S&P. Now, I'm not overly bullish. I don't think we're going to end up back to the top of this channel. I don't think we're going to get that bullish, because I think this bear market is really starting to sink its teeth. You can see with these gap downs. When we got close to that area and we started trading sideways here. Look at these gap downs. It just started fiercely gapping down. The sellers were sinking their teeth into this market. Now, with those gap opportunities, what those gap downs do, they represent an opportunity for the bulls to find some targets to rally. So with those gaps, what I would say is the bulls are going to try their best as the VIX starts to pull back to rally towards those gaps. I don't think the bulls are going to have enough steam to overtake all those gaps. So I think each one of these levels are going to represent an area of resistance. So it's going to be one. Let me so we can highlight this as one area of resistance that the bulls will be focused on next week. So that could easily send price action up to around 3,800, folks. So not saying we're going to get there, but that is just a target that we can actually look forward to. Possible target around 38, 38.40 for a possible rally. Now, I'm only saying that because we got these gaps in. These gaps normally, when we see gaps in the market, gaps normally fill, but there's no telling when they fill. And then with this fierce movement that we have down in this market, and next week is a short trading week, I don't believe the bulls are going to have enough momentum in order to fill all of these gaps. So we'll watch them as it happens, as it unfolds. I do think we're going to get a bounce off of this level of support. So keep an eye on that. Again, first target could be right around 38, 39. If we make it that far, And if we don't make it that far, we could only we can go back up to just around 37, right to this red candle, around 37.40. So we're watching that carefully to see what the VIX does. When the VIX starts to run out of steam to the downside, that's when we start to see reversal in this market. Okay, again, there's a support level that's showing right around at 38, 33 level. So pay close attention to that. And the S&P on next week. Look at a 4-hour chart. We can see how much we are oversold. So again, you can easily see a move back up, a rally back up to potentially try and fill this gap right here. Stand by 1 second, folks. So again, folks, looking at the 4-hour chart, you can clearly see this gap right here. So I would be eyeing that gap wholeheartedly, and that meets right up with this the top of this wick, this green candle. It's around 38.40. So I would not be surprised to see a sharp rally in the S&P next week, back up to that area, and see what happens once we get there. So that's a level to pay close attention to for a possible rally. So we could see a little sharp rally in the markets next week. That's the S&P. Look at the Dow Jones. Same type of scenario. Look at the this 4-hour charts. I'm gonna focus on this because you can really see the oversold territory that we've been hovering in the this 4-hour chart. So we oversold. Very short week next week. The VIX is is in a range where it's saying we can see a bounce in the regular markets. So again, here's another gap on this 4-hour chart right here. So we can easily see a move back up to around 30,500, somewhere around there will be the first target. And then here's another gap in the Dow right here. Oops, couldn't quite get that one. Let me switch to a daily chart on this one real quick. So right at a level of support, and this one right at the 38.2% Fibonacci retracement level on the daily chart. So, and there's a gap fill there. And here's this has a couple gaps in it. Here's a gap here. And there's a gap way up here, which I don't think we're going to even get a chance to make it to before we see that sharp reversal. I think the next reversal, folks, is going to see lower lows. So be very careful if you're trying to pay this market on the upside. The bear market is not over. It's going to be bear market traps. It's going to get folks fooled and thinking that okay, we're off to another long-term up move. Don't believe the hype what you're seeing. But I think we're going to see a nice little rally. And I think this one has the potential to get at least to this level right here. So we got to that level, that would bring the Dow back up to around 31,000. So a little bit over 31,000. We could see a rally up in the Dow sometime next week. So watch for that. And again, once we start hitting these levels of resistance, pay close attention because we're probably going to get a sharp reversal. And those reversals could be fierce. That's the Dow. And let's take a look at the Nasdaq. Here's the Nasdaq, and Nasdaq, you can even see that even more well defined. And this one, right at the 50% Fibonacci retracement level, I'm going to say we could possibly see a rally back up to that level. because that's where we got a nice gap there, gap down in the market. So gap right there. And you got a possible role reversal right here. So just before we get to that 50% Fibonacci retracement level, we could see a reversal in price action. So that could take the Nasdaq up to around 11,265. So pay close attention to that on next week. Anything between 11,265 to 11,500 is where I would believe that we could possibly start to see a reversal back to the downside. All right. So pay close attention to that, folks. I do think we're going to get an oversold bounce in the market in the near term. And I do just say a bounce. I don't think it's going to be a nothing long-term or sustainable rally. And I'm going to show you why in a second here. Here's a Russell 2000. Again, should see an oversold rally. This one maybe back up to that 50% Fibonacci retracement level where former support once broken becomes resistance. All right, so we should see something like that and start to break back down below this level of support sometime towards the end of next week or the beginning of the following week. But again, these rallies, if we do get a rally in the beginning of the week, I don't think there'll be any sustainable long-term rallies. They'll probably be fierce and they'll look good, but they'll be wiped out eventually. All right, now look at the monthly charts, folks. It tells the story. We haven't even reached oversold yet in the monthly chart on the on none of the major indices. We are heading there. You can see the RSI is heading there. RSI has not reached oversold. Ultimately, what I think this action here, this downward channel, it looks very fierce, folks. I think eventually we're going to end up possibly testing the COVID lows of 2020. So that's a long way down. And as you can see, it's just like a stair step level, stair step. That's how markets move, stair step down. And I think we have a potential to reach that level. That's the Russell. That's what the Russell monthly chart looks like. Look at the Dow Jones. Again, RSI, which is the bottom of my screen, is nowhere near oversold yet. So it's the monthly chart of the Russell. I mean, a monthly chart of the Dow Jones. And again, look at this downward pressure on these monthly charts. These months are creating lower lows. Each month is starting to create these lower lows. So there's still a ways to go on looking at the longer term charts. Look at the SPX. Again, you see that it's a longer way to go before we get down to this level, which is where I think we could possibly be going, folks. That's a long way down. And if we look at the Nasdaq, again, we'll see the same thing. This monthly charts are showing long way down to go. So I still think there's a lot more downward movement to happen within these marks before we find some support for a reversal back to the upside into a new bull market. But that could be a long time off. All right, folks. So that's that. And for anyone interested, there was a big pullback in crude, folks. There was a big pullback in crude. So I do think we could see some more downward movement in crude. I don't think it's going to be a long-lasting one. But crude has just got to the point where it was overbought. So if you look at a monthly chart, I'm sorry, daily chart, you can see a lot of selling pressure jumped into this market today. And we could be heading back down to these ranges around here, just below 100. So that's a huge possibility. We could be heading back down to these ranges below 100. So here is a level of support that we can pay close attention to for a possible bounce. It's right around 103. If that's broken, then we can see price actually come down just below 100. Right around 99, 99. So watch out for that over the next week or so. And if we can't hold that 98 level, we can see price actually come all the way down just below 92. All right, folks. All right, folks, stand by 1 second, folks. All right, monitoring a sick dog here. I gotta watch her every move. So she's about to do something she shouldn't be doing. She just had surgery, so I gotta keep an eye on her. But all right, so that's how we're looking as far as crude. UUP, which tracks the dollar, still showing some strength, folks. This dollar move, folks, is looking very strong. I think longer term, we're gonna see the dollar, I think, eventually. And this UUP which tracks the dollar. This UUP ETF, I think, is gonna end up breaking out above 30. So that's also negative on our markets. So I think the UP will find a way to break out above that $30 level. So keep that in mind. All right, folks, I think that's all I have to share with you guys this weekend. Again, I think we're in a longer term bear market, but I do think the markets are temporarily oversold. So we could see a little short-term bounce. And I do mean short-term. Look at that, oversold on the 4-hour chart. It's a big time oversold. So I do think we're going to see a short-time overturn bounce. So watch out for that and prepare yourself accordingly. All right. Hopefully it's something you guys can use. I will see you guys on the next video.